The easy question from that is, where's the bottom in the euro and where's the bottom in European equities? You just take the Euro Stocks 50.
Yeah, so for the euro, I mean, we think it continued to push lower. I do think a challenge with foreign exchange, especially a currency like the euro, is it's cheap on a lot of valuation measures. But I don't think valuation has been a particularly effective 3-month or 6-month signal in currencies. And you have a currency with bad momentum. You have a currency with very low yield relative to something like the dollar. So the factors that might otherwise support it also aren't there. So we think it continued to move lower. Now on the equity side, I think it seems reasonable that we could see some retests of the lows we saw in June. The best thing European equities have going for them is they have derated significantly. The forward PE on MSCI Europe is back down near the COVID lows, which is a good thing. But we do think that there's still some downside to the earnings side in Europe. We think the earnings that forward PE is based off of are still too high, and we think those downgrades will happen. We think those downgrades will probably happen ahead of the third quarter earnings season, and so that's a next kind of 30-day story.
Andrew, are the markets here in Europe, have they priced in this energy shock? Is it fully priced in at this point?
I think it's hard to say it's fully priced in, largely because of, I think, that earnings story we just discussed, where forward earnings estimates in Europe are still, showing pretty strong growth this year. They're showing growth again next year. That doesn't necessarily seem consistent with a significant energy shock and pressure and the ensuing pressure on margins. It doesn't seem consistent with a recession, even if we think that some of that growth is associated with strength on the commodity side. And also, all of this energy risk just raises enormous uncertainty. So I do think it would be reasonable for the market to price in higher risk premiums, because there is this large cloud of uncertainty around how these issues and how the policy response plays out. So look, there is I think a scenario where Europe looks a lot better next year, because we're through a lot of this uncertainty, but we have to get there first.